Welcome to the podcast series, Decoding Sustainable Finance, developed and presented by the Nova Center on Business, Human Rights and the Environment. Welcome to the Decoding Sustainable Finance podcast series, a podcast series developed by the Nova Center on Business, Human Rights and the Environment. My name is Raquel Burgoa. I am a research associate at the Nova BHRE, and with my colleague João Botelho, a research assistant also at the center, we will be conducting the interview for this episode. Today, we are embarking on an exciting journey into the dynamic world of sustainable finance and fintech. In today's world, the intersection of finance and technology, often referred to as fintech, is a rapidly growing sector that has radically changed how we manage our finances, conduct business transactions, and navigate the financial landscape. Fintech encompasses a broad range of innovations, from digital payment platforms and robo-advising to blockchain technology and cryptocurrency.
Exactly, Raquel. And as we navigate our path through this digital transformation, we stand at the pivotal intersection of finance and sustainability, where fintech emerges as a potent catalyst for driving sustainable finance.
And that's why today we will be diving into the interplay between technology and economic development and its connection with the financial market. During this episode, we will be decoding fintech, and to address these topics, we are honored by the participation of André Castro Silva. So, sit back, relax, and join us on this journey to decode sustainable finance.
So I have the difficult job to introduce our guest today. Our guest today is Professor André Castro Silva, Associate Professor at Nova SBE and Visit Associate Professor at the Kenneth C. Griffin Department of Economics at University of Chicago. His research in macroeconomics and finance. André Silva has published papers on topics such as innovation, capital flows, asset pricing, and inflation. He regularly presents his research in universities, central banks, and related institutions and conferences such as American Economic Association, the Econometric Society, and the American Finance Association. Professor has also published in journals such as the Review of Financial Studies, the European Economic Review, and the American Economic Journal, Macroeconomics.
Professor André, many thanks for accepting our invitation. And my first question to you is, when referring to fintech, what do you mean?
So first, thank you, Raquel and João, for inviting me for this conversation and for this introduction. It is a pleasure to be here and to talk to you. So about your question, when we refer to fintechs, what do we have in mind? So first, when people start thinking about fintech, we can first connect financial services and financial markets with technology and technology used for financial services. It can be something basic that we have for a long time, as making electronic transfers, as having an ATM from which people can withdraw money and connect that ATM with a checking account or a savings account. So it can be something very simple. And something that we have seen more recently is apps, programs, software being created to help people use financial markets. So there can be a software that can help someone to obtain more, for example, that will help someone to obtain or to learn about the credit scoring and to write a letter to the bank, for example, to help with the mortgage. Or that can be a software that connects people that want to save and other people that want to borrow, to start a business, for example, and then this connection is made by the software. People also think about digital currency, Bitcoin, other cryptocurrencies, assets that can be used for exchange of goods in principle. And finally, we can have a more complex organization that is offered through an app, such as an entire bank, that instead of being a bank with a mortar and brick physical setting, we have a bank that accepts deposits. And with the deposits, the bank can lend to other people using the software. So an entire banking with this. So when I think about fintechs, I'm thinking about the apps that are offering different financial services. It can even be an app that is provided by an existing bank that continues providing services with the app of the bank, or a brokerage company too. Someone that wants to purchase stocks or bonds can do that through the app of the company that exists physically, and also entire banks that can exist with the app. So the fintechs that I have in mind are those later, more recent technologies that we see existing and being used.
Thank you, Professor, for your enlightening in this topic. And I think our next question correlates with the first one, because when we talk about fintech and in general, we always correlate that with, of course, technology, but also sustainability. So we would like to ask you, what is the actual link between sustainability and fintech?
So thinking about sustainability and fintech, I believe that the best way of answering this question is to break down this relationship. So really looking at some components about that. So first, I think it is good to think about financial markets and welfare. What is the relation between why do we have financial markets? So first, if we think how people organize themselves in a country, in a city, we have to think that people do not want to waste resources. So everything that we have, that we use, they should be used for something, cannot be wasted. So if you think about a bank, if you think about a market in which people trade, even if you think a stock market in which people are physically present, or there are equipment that makes people making transactions, the space of that financial market is being used for this purpose. So it is being used for people to make these kinds of trades, to make this kind of exchange. Now, if the space is used for that, it's not used for other things. So you could think that the building that is used by a bank could be the building for apartments, and people would be enjoying living in that location. So it must be the case that financial markets help people doing something. Otherwise, they would be using the space for something else. So, and this is the first thing to think, that financial markets have an effect, a positive effect on welfare, because we are effectively using space, we're using resources. People are working for financial markets and not working for other activities. We can only see that if it increases welfare. Now, financial markets increases welfare because there are two ways in which that happens. One is financial markets are very good in transferring income that will be obtained in the future to the present. So let us say that someone is working and receives income for several years, and this person after 10 years might have substantial wealth because of even if there were tiny savings during those 10 years, after 10 years, this person might have some relatively substantial wealth to be used for something else in 10 years from now. Now, what financial markets do is that, given that this person will be able to have this quantity of wealth in the future, there can be an arrangement for people to consume something today. For example, let us say that someone wants to buy a computer, but the person does not have money at that time to purchase the computer. So a store might offer credit for that person. So effectively what's going on is that the future income that this person is going to have is being used now at the moment to purchase a computer now. And purchase a computer now is going to increase welfare of this person. This person will be able to make these arrangements. It is important to understand that without financial markets, that would not be possible. Without financial markets, and that is something that happens in countries that do not have well-developed financial markets, the only thing that people can do is wait 10 years. And after those 10 years, with a quantity of money saved, then this person will be able to purchase a computer, for example. So financial markets help to do this. This is one dimension. So you can transfer future income to the present. The other thing that financial markets can do too is that people that are in one point in time, so let us say today, so there are some people today that want to start a business, for example, that want to create a new business. And it's necessary to have money to start that business. And there are other people that are in other points of life or thinking about other things. And these other people, they, instead of starting a new business, these other people want now to save. So what financial markets do is connect people that want to save now with people that want to use the money to invest and to start a business or to do something else. As in this example of the computer, what is going to happen is that someone that wants a computer now, financial markets are going to find other people that are going to be willing to lend so that this person is able to purchase the computer. So this is another function of financial markets, which is allocating resources so that some people that want to save will be able to save, and other people that want to invest will be able to invest, and connect those two groups of people. So then we have financial markets increasing welfare because income can be transferred from the future to the present, and also increasing welfare because there are people that want to save and other people that want to make investments and want to start a business and so on. Now let us go back to your question. So the question is sustainability and fintech. So then we see how it increases welfare, and then people want to have financial markets because of this. Now, what happens is that when people start businesses and when people are able to transfer income from the future to the current time, and also when allocations work better, then people will be able to improve the way in which they work. So what it means that with the same resources, with the same quality of people in the economy, with the same years of education and so on, people will be able to produce more. And what is the point, and how can that be? If we think in a situation in which people we have the same number of people, the same level of education, the same level of ability, but it might be the case that the ages are different. For example, we have people around, and some people, some places, some regions in a country that we might see some more wealth in that region, less wealth in other region, but some people might have ideas of improving some region or offering a new product, for example. And with the financial markets, those new products, innovation will be able to occur because of the new allocation. So what happens with the financial markets is that with a better allocation, people will be able to innovate more. What I want to stress is that having a new technology that helps people to obtain more efficient allocations, the more efficient allocations will allow more innovation. And it is going to be through innovation that you're going to have sustainability, that you're going to have better quality of environment. Because this is what we observe. So usually we observe that when countries grow, they will be able to protect the environment more effectively. We have rivers with more clean water. We also have air with a better quality and so on. So that's a connection. So to summarize, fintechs are a way of having financial markets working more effectively. And given that they work more effectively, we can have more growth, economic development, and with economic development, sustainability.
Thank you very much for your clear answer and through the path of innovation and growth. And since inflation has been a hot topic lately, we would like to ask you if you think that fintechs will make it harder or easier to fight inflation.
So first of all, what inflation is. So at each point in time, we have different products, and the different products have different prices. And given the quantity of products that are produced and the prices that each product has, we can calculate an average of prices for one period, let us say for June 2023. And we compare that average of prices with the prices of last year, for example. Now, For people to make predictions, to make decisions, it is important that those prices convey information. And for that to convey information, we need to have the stability of prices. Prices might move over time, it's fine, so prices to go up or the prices to go down, but we should not see all prices going up in a rate that makes prices difficult to predict. So then what inflation is when we have a rate of 10% inflation, for example, which is a rate that was observed some months ago in Europe, we have that on average prices increased 10%, which is much higher than the target of 2% for the European Central Bank, for example. And you can think, well, now we have fintechs. Is that a relation with what we see with inflation and the ability of banks to have software that makes money to flow easier from one place to the other? And the answer is no. We have inflation because the main reason for having inflation is an imbalance between how much countries are able to raise on whether revenues from taxes and given the taxes that the governments are able to raise and other means to with the financial markets, governments can borrow too, and the expenditures of the government. So that's the fiscal considerations are much more important. And those fiscal considerations are not really in the realm under the activities of fintechs. It is something else. So the fintechs we cannot make a correlation, a connection between those financial changes and the way in which people connect with the financial markets, with a sustained inflation of 6%, 10% per year. It's something that is not observed.
Thank you very much, Professor. And really takes us to the fourth question, which is more correlated with policy. Our question is the following. Do you think that there are lacking policies at European and international levels to further fintech developments?
So this is more a legal question. I cannot really answer in a precise way. So about the legislation that we have about fintechs, what I can say is the following. One important aspect of fintechs to make clear is especially that if they act as banks, and the meaning of acting as banks means that if they are able to accept deposits, and with the deposits they are able to make loans, and usually what happens is that if someone is a client of a bank, this person wants to withdraw deposits very fast, in the short term, instantaneously, and the bank might give loans for the long run. So there is this difference between the loans that banks make and the ability of depositors to make withdrawals instantaneously. Now, this might be an unstable situation, and it requires credibility of depositors that the bank is safe, that the bank is healthy and able to face withdrawals if they happen. Now, then, in terms of the legal arrangement, it is very important then to define if the deposits of fintechs, if the fintechs are banks, if they are going to be protected, and also what is going to be the jurisdiction. Let us say that there is a bank that is organized in Netherlands, for example, and the bank is offered in Portugal, and Portuguese depositors or people that live in Portugal make deposits to this bank. And then there are many withdrawals, and this bank has problems. So who is going to provide protection for insurance protection for those depositors? It is going to be the government of the Netherlands, or it's going to be Portugal. Who is going to supervise? It's going to be the Bank of Portugal. It's going to be the European Central Bank. It's going to be the Bank of Netherlands, and so on. So this is having a clear idea of the jurisdiction, if there is a disagreement between creditors and debtors, where there's going to be any litigation and so on, those are important questions to be made, and it is very important for those issues to be clear. So that's one thing to say. There's something else too, which is the following. For me, it is very important that banks across Europe are able to open branches in different countries. So this is something healthy to have competition across banks, and also the possibility of depositors to use software that is offered in different places, different countries. And if we do not have that today, if this is something not easy to happen today, this is something beneficial. So it is important that if there is not any legal protection for those actions to happen, it's very important for them to happen in the future, because it's always going to be better if those possibilities increase for potential clients.
Many thanks, Professor. And as a final note on this episode, what are the future predictions for fintech in your point of view?
So what happens with the other technologies, other things that happened in the past? What we can predict is that they're going to grow, they're going to be more common, and people will be used to use it. So certainly in the future, it is going to be very rare to go to a bank and to make any arrangement or any trade with a bank that will go directly to the bank. So the use of software and fintechs is going to be much more common in the future. So that's my prediction.
Thank you, Professor. Before finishing up, we would like to ask you if you have any key takeaways from today's session or for today's episode for you to share with our audience in regards to fintech and this theme as a whole.
So the takeaways first is that having fintechs are financial technology and they are improvements in technology. And improvements of technology, they allow economic development. So that's the main part. Some people might believe that if we have a software instead of having a bank, this is going to be good for the environment because we do not have the bank. So the bank might use resources because there is a building and it's costly to build and so on. Well, there is this dimension, but this is not the most important dimension, because also to have the software, there is a structure that is needed to have the software available to you. You might not see it, but it is also there under the software, under the program. So the best thing to think is that it is a new technology, and new technologies are good for economic development. And being good for economic development, they're also good for welfare and for sustainability. That's the first point. And I would say that the second point is that they will be more common, they will grow, and people are going to use it.
Thank you, Professor. And I think with that, we've come to an end of yet another enlightening episode of Decoding Sustainable Finance. Of course, we would like to express our sincere gratitude to Professor André, who joined us today and shared the invaluable insights. It's clear that the world of fintech is complex and ever-evolving, and with significant implications for sustainable finance and economic development. Isn't it, Raquel?
Yeah, definitely. And thank you for being with us. And until next time, keep decoding sustainable finance.